Olga Feldmeier. We're here to talk about Bitcoin and other cryptocurrencies, which is a huge rage right now. I wanted to ask you about some of the more risky sides of cryptocurrencies in particular. There's a lot of talk, especially about sort of illicit money going into that space. Is the risk of that exaggerated, do you think?
I think it's a little bit exaggerated today. It used to be a completely different situation as Bitcoin started, 10 years ago. Probably about 80% of all transactions were somehow connected to illicit goods sold or, money laundering. But the situation dramatically changed, in the process of more and more exchanges and wallets being properly licensed financial institutions, right? They have to apply the same anti-money laundering compliance rules, right? So that is, limiting the number of players that come to this space with different purposes.
And we also see that trickling through now to regulation in different countries. Do you agree that the whole space, cryptocurrency, should be more strongly regulated?
Absolutely. That's what we need to protect investors on one side, and that is what we need to create more security and better, protection against cyber attacks, against hacking and so on. You would be probably surprised, Kathleen, but today around 80% of exchanges are illegal. They have no legal status, yes. And that leads to the situation, where, we try to do our best not to be hacked, but if this happens, actually who is responsible for this and what are the consequences? This is it's not a good place to be in, right? And I think for all of us, players within this field, more regulation, clear guidance is a way to go.
Now, Switzerland, of course, has adopted a pretty, I'd say, regulatory friendly, at least signaled that it will adopt a friendly environment towards this. Do you view that as a chance for Switzerland to kind of build on its banking industry?
Absolutely. It's actually a chance for the whole world, I would say. The whole world today is in the search of this new, I would say, the new hub for crypto finance and actually regulators that is more liberal and more open in regards to the new technology, blockchain technology, applications of blockchain technologies, right? And we've seen, that for larger states like US and that have huge bureaucracy, it's very difficult first to understand this technology and what's going on there, and to create rules that are flexible and open enough to enable, not to stifle innovation, right? So I think the approach that we've seen here in Switzerland with financial regulator FINMA is one of the best approaches worldwide today, right? There were two most important cases that happened in Switzerland. One of the first of those were the regulation or approach that was taken in regards to the company, one of the largest Bitcoin custodian, which I worked for previously, and we achieved a very good solution with FINMA, how to be able to operate here without being a banking institution. Right. That was first very important regulatory case, which kind of signaled, yes, this authority is open to this business. Yeah. And the second case class is about ICOs, right? And here we've also seen, even 2 weeks ago, while the FINMA issued guidelines for ICOs, exactly. We've seen actually very constructive, balanced, and neutral approach.
And yet, sort of in the world of traditional finance, which Switzerland's history is obviously based on, you really have very few friends, or you will find very few kind of accommodating voices for cryptocurrency, and also in central banking, and that's in general, not just in Switzerland. What do you think will have to happen for those two worlds to meet, the world of traditional finance and the newer emerging cryptocurrency one?
That's a good question. I think, and I hope very much, that today's phase, where banks are, quite skeptical about the Bitcoin and those companies, at this stage will be that we will close this chapter very soon, because you see, currently it's kind of like one of the biggest hurdles on the way to to implementation of those business models. They are regulation and banks, right? And you know, it used to be very easy for banks to say, well, we don't work with Bitcoin companies because they're not applying AML and compliance rules. So because we want to prevent money laundering, we don't work with them. The stance is still the same. We don't work with them because of this, but this statement is not true anymore. Because when we talk about ICOs or those fundraisings, right? A lot of companies, good companies, they apply all the same compliance rules and screening as a bank would apply when they take in customers, right? So this is just not true, right? And I see, you know, certain kind of like, you know, silent collusion within the banks, how they, you know, kind of like try to block. Yes, and try actually to block this industry, you know, because they know that this technology arrived to disrupt completely the way banking and finance was done. This is a technology to disintermediate the whole industry, right?
That is true.
And everybody knows this, right? And, you know, Jimmy Dimon said...
yes, of course, famously said it's a scam. So if you had your druthers with a wealth management client, for example, an affluent or a very wealthy person, what would you recommend that he or her invests in terms of just cryptocurrencies or digital tokens? Does it have a place in their portfolio?
Yeah, you know, it took me a while to understand, like, you know, my background, I used to had a distribution unit for Central and Eastern Europe at UBS, right? And I understand very much the needs and specifics of, you know, advising high net worth and ultra clients, right? And after I jumped into Bitcoin space in 2014, I learned pretty much in depth the differences and the approaches of different investors in this space. So after all this studying, I arrived at the conclusion that cryptocurrencies today very important component of alternative investment place in your portfolio, right? And I normally recommend everybody to put around 1% of their wealth, if they are, you know, in that space, in that wealth bracket, into cryptocurrencies. And also within this 1%, diversify between, you know, cryptocurrencies and protocol tokens. If you would look back at what happened if you would invest 10 years ago in Bitcoin, right? I mean, it's been an incredibly successful story.
Yes, of course.
And I think it's not over. We will see Bitcoin going to 100,000 price tag and so on. And for me personally, it was a great opportunity, right?
That would have been my next question. What personally are you invested in terms of cryptocurrency? Do you hold to that 1% or more?
I invested much more back in 2013 and then increased it a little bit in 2015 as I joined Xapo. And actually, you know, I'm very lucky about it because this enabled me to start my own company, right? Smart Valor. And what I do today, this is like, you know, the best thing I could imagine ever doing, right? And this is just became possible because I invested in Bitcoin and had enough money to start my own company. And you see a lot of people that that, you know, realize this vision and I think, you know, with Bitcoin has an opportunity to become digital gold, to become alternative reserve currency of the world, right? If just nothing happened new, if just things go like they were going the last 10 years, right? So I'm very positive about it. And of course, there are all different other currencies and protocols which were even much more successful last year than Bitcoin. There were in different classes growth rate of 30 to 50,000%, right?
Wow. It's very interesting to hear from an obviously enthusiastic early adopter. Thank you very much, Olga Feldmeier.
You're welcome.